Welcome back, traders. Another week in the books, but did we actually get our Santa Claus rally? Well, the market was up 0.49% today, which is great, but our trend model is still at a -1. We are still below most of the key moving averages, including the 5-day EMA, and we are really just putting in what could arguably be viewed as a bear flag right above this monthly value area low. You have to consider for Q1 of 2023 that this level down here, this 36.99.75 VPOC, is certainly in play for the market, but we did get one new piece of very interesting information today. We have a record level of short interest in the NASDAQ QQQ ETF. Short interest for the NASDAQ is the highest in a decade, and a decade is a long time. Throughout this bear market in 2022, the best opportunities to get long, have they been when the market's green for 7 days in a row and everyone's getting more optimistic? No, they have really been when investors are super pessimistic, when everyone is positioned for one side of the trade, and then you get some buyers that come in or some good news that really just shifts things up a little bit. So it is good to see that we have that record short interest. I noted down here that I would be adding a long position in this group today, and that is exactly what I did. I went ahead and added a position in this TQQQ ETF for $17.19, given this really lopsided positioning. But let's take a look at the NASDAQ and see how it did today. This was our Finviz heat map. You can see the best performing group was energy, and Tesla really could not catch a bid. The NASDAQ is still out here in no man's land. We're below this monthly value area low, but we were not able to get much traction to the downside. The VIX finished down a full 5 percentage points, and we are still hovering around this 20 level, and that is definitely a bit concerning considering the fact that the market is really not bouncing or rallying. It's just kind of treading water. Now, we only have a few more trading sessions left in 2022. This could just be some tax loss harvesting that is happening in the market. It's sort of the exact opposite dynamic of a Santa Claus rally. There was one gem of a stock today. We added a position in this name yesterday, and it was Crocs. Crocs, despite some intraday volatility, closed out with a nice green hammer bar. And I do think that if the market gets any sort of velocity, any sort of bounce over the next couple of weeks, I think Crocs is a really good looking candidate. Now, we know we have that record short interest in the NASDAQ, so all it would take is a small positive catalyst to get the market moving in the right direction. But make no mistake about it, the trend is currently down. And so for that reason, I did take off one of my positions in Pinduoduo today. I think I added this trade as well yesterday with Crocs. Closed out for $83.85. I'd paid $85.81. And I just noted that we're just not really getting much strength into this Santa Claus sequence. Pinduoduo, I've seen this look a million times before. It looks like it's going to hold that 20-day SMA. Then what do you know? It just doesn't. You put in a red candle. And I've seen this movie so many times before. You might go, it's still within the same range, no big deal that it broke the level, and then all of a sudden you just get a waterfall to the downside and bad things can happen. So I said, you know what, this one I'm just going to nip it in the bud, especially because the market's a little bit on the weak side. Now here was the thing that I really did not like today. Our 10-year treasury futures, look what's happening. They're just rolling over. Remember, most of this nice rally we had in equities was on the back of a rising treasury future. And that means yields were moving lower. Now we're getting the exact opposite, which is happening. So it is important to see these signs as they appear in the market. This really is what market generated information is all about. And it's all about when you see things that don't look good, not getting incrementally more aggressive. So I said, you know what? I added TQQQ. Let me take something off. That way I'm not just like overloading myself with risk. So basically we have a yellow to red flag in the VIX. We also have a yellow to red flag in bonds, and the overall market is just kind of bear flagging at the moment. And our trend model is negative. So that's really telling me all that I need to know into the final week of the year. Remember, it's a trading cliche, but it is true. You have to trade the market that is in front of you, not the market that you want to see. With that said, tomorrow is Christmas Eve. The following day, we have Christmas. The market is closed on Monday. Hope you all have a happy and safe holiday. We are going to be putting out our weekend watch list video and our weekend market analysis video this weekend. If you're interested in receiving either of those, visit pristinecapital.net get yourself signed up for our active trader membership. Then also feel free to hit that like button on the video, subscribe to the channel. It really helps us.